Okay, quick sound check. Sound check 1, 2, 3. Welcome back, everyone, to another week. No, it's our live market outlook for this week. Just a quick sound check. Let me know if the audio is coming through okay. Okay. Seems to be good. Before we begin, just per usual, general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative of future performance. Okay, good. Audio seems to be good. Thanks, Michael. Okay, so a couple of things to take a look at this week, but definitely one is yen weakness to consider. Question on crude. We'll take a look at Canadian dollars as well as gold. But let's just jump into crude, WTI or XBR. So we're going to take a look at UK oil first. So we do have a little bit of a drop. Not really significant yet. Although if you are planning to go for a short, again, for crude oils, I don't think this is in the realms of short-term traders or stuff like that. But if you're going to be looking for a long-term position to go short on gold, oil futures, just be a little bit more cautious on this one. We do have a resistance coming in at 120. This is for UK oil or XBR. We'll take a look at it on the hourly time frame. This one has already transitioned below the Ichimoku cloud, at least on the hourly perspective. If you are planning to go short, just make sure your stop losses are positioned well. Depending on what you're looking for, if you're going to be trading this, more of a swing trade, then make sure your stop losses are at least above 121, ideally above 122, because those are your key resistance level. There are 3 picks on the hourly time frame here. That's basically where you want to be placing your stop losses. Okay, and the last one is around 118. So if you're planning to trade this intraday, if you're planning to go short on this one, it's not quite time yet. Ideally, I want to see price below 116. But if that's the case, then I want to have my stop loss placement slightly above 118. Now, in terms of target, you are going to be looking at this low here around 113. So you could adjust that to about 113. That would be your ideal intraday scenario. Just make sure your stop losses are not that far behind. In terms of placing your stop losses at around 122 on XBR, just be a little bit more cautious because we don't have that confirmation yet on the daily time frame. You might have that confirmation on the hourly time frame. Just make sure your stop losses are not that far off from 118 just to minimize your exposure. Okay, this is for the XBR. Is it time to go short yet? I much prefer a close below 116. So ideally, I want to see a close below 116 on the hourly time frame before I plan to go short on XBR. In terms of XTI, this one might be a little bit closer to confirmation. We're already trading below 116. So if you are planning to go short on XTI, I much prefer XTI than XBR. Then your stop losses could be just slightly above 117. Just slightly above 117. In terms of target, you could be looking at around 112 or 111.50. But you have your options here. I much prefer the XTI rather than the XBR because the XTI just transitioned below the Ichimoku cloud. Then it kind of retested the Ichimoku cloud. So just to give you that perspective, I'm going to draw it here. All right, so we are back up and we are down. I just prefer XTI much better than XBR. And in that context, I think there's a lot more volatility in terms of XBR. But ideally, both of them are likely going to be moving in the same direction anyway. I just feel a little bit more confident with XCI because in terms of risk reward ratio, it's just going to give me a much better risk reward ratio. I'm not risking too much. I don't have to place my stop losses far ahead, far in between. But just in case, just because the range itself is actually not as wide as the XBR. Okay, so I'm going to zoom in a little bit. I'm going to leave it there. In terms of XTI, I'm okay. Ideally, if you have another hour on the chart to give you that confirmation, that would be okay. If you want to go short right now, it's below 116. Just make sure your stop losses are just slightly above 117 on the XTI. Now on the XBR, this one is a little bit wider in terms of range. In terms of risk, it's close. I mean, one is $1.80, this one is $2.10. But risk to reward ratio is just it looks a lot better on the XCI. But here you are. If you are looking for ideas to go short on XCI or XBR, I'm okay going short XCI now. Not quite okay with XBR. I think I much prefer to see a close below 116 for the XBR. Again, tonight's topic is not going to be anything educational, but if you do have any questions regarding, something that we previously discussed, do type it in. If you have any requests on any stuff that you are planning to look at today, just as per usual, do type it in and I'll have a look at it for you. Okay. Request for dollar pairs. I'll definitely be looking at dollar pairs. I just want to talk about crude oil because I was looking at crude oil as well. So good question there, Sandeep. Do I know how to use pair correlation? Yes, I do. But do you have any questions regarding pair correlation? We can take a look at that. Or you want me to give you an example? We can do currency cross to look at correlation. US 30, yes, definitely. Not a problem. Thanks for the question. I mean, if you take a look at it from a daily perspective, you are seeing a potential turnaround. The only thing that I'm worried about is just that this is still trading above 80 on the stochastics. I know it's pointing down, but it's not really down below 80 yet. So we don't classify this as an overbought market yet. But if you take a look at the Fibs here, the rejection kind of comes in at around 61.8 on the daily for XBR. In terms of XTI, it's just that there's 116, and again, it is 61.8 there. But if you take a look at the whole scenario here, XTI is a little bit more flat, and then XBR, I think there's a lot more volatility going on with the XBR. But XTI, yeah, I'm okay with going short. Just make sure your stop losses are not too far above. Inputs on gold, yes, we'll take a look at commodities first, I guess, today. So yeah, let's take a look at gold. Let me go through gold on the daily first, okay? On the outlook, I was talking about this pivoting around 1850. Right now, if we take a look at the scenario here, we could see this going down further. Right now, it's not really at support level. It's around 1830. 1830 is not a significant key support level for gold. I think we might be able to draw a new fib on this one. I'll get rid of the stuff above 1900. I don't think we need all that. I will leave 1920. I'll leave 1900. I don't think I need this one here. 1780, yes, I'm still going to leave it there. But here's a new fib for you if you are going to be drawing a fib. There's a new daily fib. It's a little bit shorter, but here we go. So we could see this one push down to 1820, and that's where the 61.8% is on gold. I'm a little bit more concerned around 1820. So for gold, is it time to be picking up gold? Let me put things into perspective for you. This is on the early time frame. It's way below the Ichimoku cloud. So any push to the upside is going to be limited. And in terms of limitation for gold, are we going to go back to 1850? Potentially, but before 1850, we could be stopped out at 1840. So if you're planning for a short-term trade on gold, just make sure you are paying attention to 1840. and I'll explain in a little bit why that's the case. Not just because it was just previous support and stuff like that. If you take a look at the whole momentum here, stochastic is going up, price is not going anywhere. So okay, so if this one picks up, unless you're really scalping the market, and I'm not into scalping the market, so that's just a little bit too risky. If you are planning to go long, just make sure your stop losses are below the 50% level, around 1828 or 1827. I don't like it, so I'm not going to draw it there. But if you are planning to go long on this one, just be mindful, because this one could easily be broken. If we do have an hourly close below this support, sorry, not support really, but yeah, basically any hourly close below 1830, that's going to drive gold down even further. So I don't think it's really time to go in for a long yet, because in terms of risk, take a look at this one here. You're going to be risking a move towards 1820. So let's put this into perspective. If you're planning to go long right now, target's going to be limited at around 1840. In terms of stop losses, you can have it there, but it could easily be taken out. It's not really a significant support level. You want something significant, you want to have it at 1820, and that's really close to 61.8%. Risk to reward ratio is not going to be great. It's not even going to be 1-to-1. So that's for going long gold. If you're planning to go short gold, you're kind of in between as well, because you're going to have your stop losses above, closer to 1840. In terms of target, you're going to be looking at around 1820. Risk to reward ratio, slightly better, is about 1-to-1, but is it worth the risk? It's $10 up, $10 down. So gold, I would wait for either one of the scenarios, okay? So either there's an hourly close below 1830, or price move up to maybe, let's say, 1835 and then go rejected, then that's your cue. Okay, so that's scenario one. Scenario two is just is price closing below 1830. Oops. So let me just get that. So if we have an hourly close below 1830, then it's kind of okay, because we do have a stop loss that we might be able to use. That would be around 1835. But right now you are kind of in between a rock and a hard place for gold. If you have a running position, that's a different story. If you are looking for new positions in gold, I don't think it's time yet. But yeah. Okay. We'll take a look at the US 30 and then the NASDAQ as well. So we're going in reverse order. We're not going to be talking about currencies first. We're going to be talking about commodities and equities and stuff like that. So this one, I think I can remove some of the lines here. We don't kind of need it. Okay, again, let's check our FIPS. In terms of extension, how far has this one gone? This one has touched 127.2. Can we draw a new retracement on this one? Ideally, but yeah, take a look at this one here where it bounces off 23.6% yesterday. So there's no daily close below 23.6%. So in terms of a strong direction towards something, we're still relying on the previous Fibonacci level. So we got 127.2%, that's your resistance. And that's what we're going to be looking at in terms of intraday resistance. So let me just go into the hourly time frame. That 127.2, which is around 33,340, that would be your intraday resistance. I don't think this is actually going to be trending. Let me just take it out into perspective for you. This is going to be the range that it's likely going to be traded in. Okay, we're going to be looking at support around 32,750. I'm not even going to be looking that far, because if you go from an intraday perspective, there's actually a smaller range that you can actually use, and that would be that and this. Okay, so around 33,000, 32,900, give or take 100 points, that would be your support. Now, if you take a look at that support, that would be below the Ichimoku cloud, or just right at the Ichimoku cloud itself. So this will be your support area. In terms of potentials, is it going to go anywhere? I much prefer this one to go up rather than go down, because if we take a look at the momentum here, we're stuck in between right now in terms of price. Momentum is already moving down. So what I'm expecting with momentum is that momentum could go down, price could just not go anywhere. Normally we do have the ADP numbers today, but this week ADP is going to be tomorrow. You can probably tell from the outlook. This week I was actually getting mixed up with it as well, because normally it's on Wednesday, but now it's on Thursday. Probably due to the Memorial Day break on Monday this week in the US. So US 30 right now, I expect this to be more in a range bound market condition. In terms of range, we are going to be looking at about not much within 200 points. That would be your range. Sorry, about 320 points. That would be your range for today in terms of US 30. If it does break above 33,250, doesn't have to be 33,300. Any close above 33,250, I much prefer to go long. So somewhere there. I much prefer to go long, having a stop loss here. In terms of target, yeah, ideally you can go for this one first, but this can easily be adjusted to 34,000, and then we'll match it up with the daily. Because actually no, there's actually a small fib that we can use for our target for this one. Let me just get that. Yeah, close to 34,000. We're looking at about 33,700 to 33,900. Risk to reward ratio is going to give you 1 to 2 risk to reward ratio. I think that's okay. You're looking at risk. In terms of risk, it will be the whole range right now around 340 points, but you're going to be looking at a target that's around 600 points. Is it achievable today? Probably not today, but potentially by Friday, maybe. Just make sure your stop losses are there. Okay. That's for the US 30. In terms of intraday direction, I don't think we have a clear direction. I think this is actually going to be range bound because it's very close. It's actually still within the Ichimoku cloud. And if it does move back down, we're still within the Ichimoku cloud for the day. So be a little bit more cautious with this one. Don't rely too much on the momentum here. But if you want to give, if you want me to give you the pivot points for this one, let's do the pivot points for US 30. Okay, I'm going to hide the Ichimoku cloud. So there we go. In terms of where price is, it's actually trading above the pivot level. That's why I'm actually more inclined for this one to... I prefer a long than a short in terms of stop losses. Obviously, you can use this one, the support one. That would be around 32,775. Obviously, target-wise, take a pick. You got 3. You can use this. And I like using pivot points with the US 30 or the Nasdaq 100. Just a lot more people actually use pivot points for this one. Okay. So that's your US 30. I much prefer a long than a short. Right now, I don't think it's tradable yet. I would prefer to wait for a close at least above 33,250. So let me just write that down. 33,250. Okay, so that would be your key level to watch out for. That would be your number to watch out for. If it closes above 33,250, then yeah, I much prefer to go for a long than a short on the US 30. Remember that last week, let me just put this into perspective for you. Here's last week. I know I put a note out there, but just in case you guys didn't notice, I don't really want to go for a short on this one. This is on a weekly, but take a look at this one. I'm going to count it with you. So you got 1, 2, 3, 4, 5, 6, 7, 8 bars of being in red, and then it snaps that. So put it into perspective, it's 2 months in red, like straight reds for the US 30, 8 weeks, and then last week it reversed it. It breaks it, So right now you could potentially be looking at a potential correction that's happening in the US 30. I don't think it's time to go short on the US 30. There's a potential bounce on this one. Is there correlation with any other assets out there? There's actually one asset that I need to talk about, and that would be Bitcoin, but we'll move on after the Nasdaq 100. Okay, so Nasdaq 100, similar situation on this one. Take a look at this one here. Same thing. We got that break there. About 7 days. 7 weeks. 1, 2, 3, 4, 5, 6, 7. 7 weeks of being in the red. Market snapped that last Friday. So I think that's good because risk appetite is coming in. There are concerns about inflation in the Eurozone and whatnot, but really on the US side of things, I think it has calmed down a little bit. I think risk is returning into the market. So you can put this as risk appetite returning into the market, or it's simply a technical correction that's going on in the market. But to note here, we do have last week closing positive, kind of creates a kind of a bullish engulfing. Stochastics turning around. This is on the weekly, by the way. So just as a guidance, I don't normally go into the weekly, but put it into perspective. We just had a snap of about 2 months being in the red. Okay, so it's something notable. In terms of the Nasdaq 100, again, let me bring back the Ichimoku stuff. It's within the Ichimoku cloud. So anything that's within the Ichimoku cloud, normally for me, it's a no-go. I much prefer to see market move above or below the Ichimoku cloud. And anytime it's actually within the Ichimoku cloud, then I see that as a potential sideways range bound market condition. You can cap this with a little bit of a range if you want to. That would be 18,767 and this low here on 12,480. This one can be adjusted. We'll take 12,500. So if you're looking for key support on the Nasdaq 100, 12,500 is definitely going to be your key support level. In terms of resistance, you're going to be looking around 12,760 for your resistance. I much prefer to wait for a close above the Ichimoku club, but if you want your fib, this is actually going to be your fib. So right now, where the 61.8 and 78.6%, that's going to be your key resistance. I don't think there's any need to rush because if it closes above the high over here, then you could be looking for a long. I mean, it's so close to 78.6. What about we wait until a break above 78.6, and then you can use this as your initial stop losses. In terms of target, since we just had a snap of the 8-week, we could potentially be looking at a return towards 13,000. I think you need to pay close attention to 13,000. Risk reward ratio is initially going to be 1-to-1. So if you're planning to go long, or if you're already long on Nasdaq, then I'm okay. If you're planning to go long, then you could go long. Just make sure your stop losses are below this low here. Or ideally, I much prefer this one to be below the Ichimoku cloud. So let's say around 12,550. Okay. You could potentially be looking for a long right now. In terms of target, I would just go for the 127.2%. Just slightly below 13,000 if you're planning to go long. Just be mindful. You might not gain traction until price closes above the Ichimoku cloud, which could happen in the next 2 hours or so. If it does closes above the Ichimoku cloud, then I much prefer to go long on this one. Let's double check on the pivot points. Anything in line? Resistance 2 is in line with our target as well, around 127.2%. So I'm okay with this one. Okay, so you got a lot of reason to be watching out 13,000 potential return towards 13,000. That's possible. Just keep an eye out on that one there. Okay, let me just double check on the US 30 if we can go long. I think we could. If you're planning to go long on the US 30, it is. I mean, just make sure your stop losses are not too far. I wouldn't put my stop losses down here. If you're trading short term intraday wise, you could be using this, even the resistance one around 33,325. That's gonna net you 148 points. Risk reward ratio is it's 1-to-1, or you can adjust it to a second one if you want to, but I would match it with this fib here, and I would go for the second resistance. That would work fine. Just make sure your stop losses are below 33,000. Okay, so I'm gonna hide the pivot point so as not to get you confused. I think US30 and NASDAQ, I much prefer to go long than go short on the US30 and NASDAQ. If you are planning to go long on this one, it doesn't do you any harm if you wait an hour or two. Just make sure price is above the Ichimoku cloud, at least on the hourly time frame. In terms of target, it's outlined there. You are going to be looking at around 33,500, 33,600 for your targets. Right, this area here, that's going to be your target level. In terms of stop losses, just have it below 33,000, and I think it's going to be okay. So I'm just going to type it in. Okay, 33,000 on the downside. In terms of resistance, you're going to be looking at 33,500 to 33,600. Okay, so that clarifies a lot of stuff. What do I buy now or sell now? What do I don't know. It's up to you. Yen pairs, yes, we are going to take a look at yen pairs. Can you explain once again the reasons US pairs got stronger? I kind of missed it yesterday. Is it because of the impact of data news, or is it just market expecting? Market's not really expecting anything. One of the key drivers is inflation concern, especially in inflation CPI numbers coming up from the Eurozone. Let me just pull that out. That's one, and then the other one is actually the Finance Ministry of Finance in Japan and Bank of Japan. I think they want Bank of Japan to hold off a little bit on in terms of tightening their monetary policy yet. But let me give you one of the key pointer why the market is a little bit concerned. It's actually the Eurozone inflation rate. Expectation was 7.7% to 7.6%. The number that was headline inflation was 8.1%. Core inflation up to 3.8% from expected 3.5 and 3.4%. Now, when since we're taking a look at the calendars, don't forget that the Bank of Canada is actually going to be hiking interest rate tonight. Consensus is for 50 basis points. I believe it's going to be out in an hour and a half for Canada. So anyone trading Canadian dollar, just be a little bit more cautious. NFP numbers, I don't think it's actually much of a concern. Not really too much of concern, and I'll explain a little bit why is that, especially in terms of sterlings. UK is actually going to a holiday tomorrow and Friday, so if you are trading anything sterling, just be a little bit more cautious with that one. Okay, if you a clear price action signal but the stochastic RSI shows otherwise, what do you do? It depends. The RSI and stochastic is there to help you. It's not really there to impede you, depending on your price action signal. What is your price action signal? Because depending on the price patterns that you see, stuff like head and shoulders, that could easily be read wrong. In terms of range, what's your price patterns, right? I mean, what's your breakout? Are you looking at a flag? Are you looking at a wedge? Are you looking at the right thing? It's really a broad. It's really I can't give you a very specific answer for that. But if you find the RSI and stochastics are starting to, kind of confuse you, all you need to do is just clear it off. Okay. I could I mean, if you take a look at this one right now, US 30, should you go long or not? Because the stochastic is kind of like in between. It's not going to go anywhere. It's irrelevant because if you zoom out, you'll kind of know where the direction of the market is, right? I don't need to get the momentum. I mean, I don't need to get the RSI to stochastics to read me what are the chances here in terms of trends in the US 30 for the past, 1 week. All right. I mean, where is it heading? Does it look like a correction to you, or does it look like a market that's already trending? I'll zoom out a little bit, and you can see what's going on here. There's a slight reversal that I was cautioning you on that. 2 months negative on the U.S. equities. Okay. So we got US 30. We got gold. Aussie down. Yeah, we haven't looked at Aussie yet. I had a position on Aussie USD. May I take a swing position to 0.73? I'm assuming you are going long on Aussie USD. Let me just bring up my Aussie USD. I don't think this is going down. Okay, so right. Take a look at this one. Can you take a swing to 73? I mean, if you already have a swing position under, I don't think there's any indication yet saying that this is overbought. It's not gonna go up. I'm actually gonna be looking at around 74 before we actually see anything significant. But I mean, if you are framing it 73 to 74, that would be your key resistance. I don't think we are anywhere near that. So if you take a look at it from the daily, we still have that potential room there in terms of the hourly perspective. Can you go to 73 today? I don't think you can go to 73 today. But if you're talking about swing position, whether it's going to be today, tomorrow, or Friday, yeah, is it going to go straight up without any correction? I doubt it. I think we are going to be seeing a staggered move. Again, if you take a look at how the Aussie is, and let me just remind you how the Aussie is. It's every 50 pips you need to be cautious. Okay, so every half cent, you need to pay close attention to the Aussie. So right now it is above 72. I'm not really too concerned with this one. I'm not going to be too concerned until 72.50. If you're planning to go long, it doesn't make sense for you to go long right now. If you already have a long position, that's okay. But if you are planning to go long and you're chasing this move right now, what's your risk? Because you could only target to about 72.50 before you actually find resistance. Risk reward ratio is not going to be great. Okay, so forget about it. It's a little bit too late if you are planning to go long. If you're holding a swing trade to 73 or 74, then take a look at the daily. We do have enough momentum to go there. As long as we're above 71.50, all good. But is it gonna get, in terms of trend, it's actually still below the Ichimoku cloud. So whatever you're looking at right now is really a technical correction. So be mindful on this one. So Aussie USD, I don't think it's a great trade, not right now. If you're planning to go long on the Aussie USD right now, even on the US break, you passed that. We passed the US break. I don't think it's optimal in terms of taking a trade on the Aussie USD right now. Even if you want to scalp, all right, go somewhere else. I think there are much better option than the Aussie USD. Okay, so can we bring your attention to Pound USD a little bit? Okay, Pound USD is slightly different. Just be mindful. The market, the UK market is actually going to be closed to tomorrow and Friday. So today is basically the last trading day in the UK. FTSE is going to be closed. It's bank holiday tomorrow and Friday, so the market is actually going to be closed. Now, this is like a super long weekend in the UK for banks, at least. I believe it's what do we have? Platinum Jubilee bank holiday tomorrow. It's spring bank holiday. Okay, but I want you to note with Pound USD here, I think the outlook we're talking about 1.2675. If you want to know what that 1.2675 is and where do I get at 1.2675, I can zoom out a little bit. I can tell you, I believe it's September low. Yeah, it's September 2020 low. Okay, so that's where the 1.2675 is in terms of resistance. I won't rely too much on the fib. I actually prefer to use the 1.2675. That's your barrier for sterling. Now, current condition for selling is this: is that if we transition below the Ichimoku cloud, then we could potentially see a drop on this one. So very similar to the crude oil that we were looking at. I'm just waiting for further confirmation on the daily. However, on the hourly perspective, be mindful, because if you take a look at this one here, in terms of range, it might seem huge. This is actually range bound between 1.2675 and 1.25. Okay, so range wise, I believe it's only about 175. It's not really huge for pound USD. So this is actually still sideways. It's still range bound. If you're planning to go short GBP USD, make sure there's a close below 1.2560, 1.2550 intraday if you are planning to go short on the early time frame. And if that happens, just be mindful. Whatever short you have, you want to go short right now, you want to go short later. Your stop loss doesn't change. The first stop loss that you have is slightly above 1.2625. If you want to play it safe, then have your stop loss above 1.2675. Regardless of the matter, your target level is going to be 1.25. Okay. So yeah, is it going to give you a 1-to-1 risk reward ratio? Yeah, it's going to give you a 1-to-1 risk reward ratio. You can minimize that risk reward ratio by having a small stop losses above 1.2625 if you want to. That's going to give you a risk reward ratio that's about 1-to-2. Okay, but it's only 40 pips to the upside. I don't think it's going to give you a lot of safety measure on pound USD. But let me remind you what's going on with pound USD is that this is actually range bound with a tendency to be a little bit more bearish on the pound USD. Okay, so next up, should we talk about Euro USD? We'll talk about Euro USD just quickly because we do have that resistance at 1.0750 as well. Very similar situation with the sterling in. The only concern that I have is that the inflation number for the Eurozone is actually high. So, that could provide a little bit more support for the Euro USD. But, if you take a look at the Euro USD intraday wise, it's actually ranging. In terms of resistances, I can draw that. In terms of support, we have that. If you're planning to trade intraday, you got this small range and this range over here. But it's just that we're past the US breakout session, so it's kind of irrelevant to have this range here. But so yeah, just measure this range. Around 100 pips. Okay. In terms of pips, I think we are done to. Yeah, we're done at 61.8% as well. So 100 pips, 61.8%. That's where the Ichimoku cloud is. Just be mindful, we are trading below the Ichimoku cloud. If price transition above the Ichimoku cloud, then stay clear away from Euro USD, because then the risk just becomes, sorry, not risk. It's just that the uncertainty level just went up. Okay, so. Ideally, we don't want to see the Euro USD closes above 1.0750 for today. I don't think it's great to be trading Aussie USD, Euro USD, Pound USD right now. They're all range bound. One of the key drivers that the US dollar is attempting to bounce off. So I'll show you the dollar index right now. So this is the daily dollar index. What you can see here is that the stochastic is actually turning around. Now, I did put an outlook on Monday that I did mention that we're not really full on negative full dollar weakness yet. So what the US dollar is attempting to do is actually attempting to bounce off support. It's not even at the Ichimoku cloud yet. However, if the this is on the daily, by the way, the dollar index. This is on the daily. If the stochastics on the daily on the dollar index goes above 20 level, then we could see a turnaround on the dollar index here, and that's where the Aussie USD, the Euro USD, the Pound USD. I think the Aussie USD is stronger, but the Euro USD and the Pound USD, you are there's a lot of sideways risk or range bound risk with that, just because there's going to be a potential transition with the dollar index here. So what's going on is that this is attempting to move away from 101, but if you got pressured lower and then closes below 101, then we could see that turnaround with the Euro USD and the Pound USD maybe picking up again. But right now, a lot of risk on potential dollar strength returning into the market. And one of the few key driver is actually because the Japanese yen weakens. I'm going to talk about the yen crosses now. But if you do have any other questions that I haven't answered yet, do type it in. So yeah, let me just go through the questions. All right, I just gave you the reason. It's not. Euro USD getting very strong recovery. It's really technical. If you've been following my outlook, there's a lot of talk about this moving away from 1.05. We move away from that. The other factor is that risk appetite was returning to the market. We saw that happen in the equity market as well. And then we got the inflation numbers. Inflation basically really high in the Eurozone. So yeah, you can take a look at it from a technical perspective, but let me give you my technical perspective. The Euro USD is not in an uptrend yet. This is merely a technical correction. We don't have any clarification whether this is actually going to transition higher or is it going to transition lower. It all really hinges on what ECB is going to be announcing. So that's what's with the Euro USD. And that's one of the few reasons why I haven't been talking about Euro USD a lot, because let me just clarify. Let me zoom out and you decide for yourself whether this is an uptrend or it's still a downtrend. Okay. So I'm zooming out. Take a decision for yourself whether it's an uptrend or a downtrend. This is the overall market outlook. This is on the daily. So any push to the upside in the past 2 weeks or so, that's not really a strong indication of anything. It's just that it was overextended. We were talking about, we did talk about this. I believe that was, we were looking at January 2017 low. Okay, so we had the Euro USD push that low. It bounces off. I think it's purely technical. Okay, so it's not really an uptrend yet for the Euro USD. Just be mindful of that. Because if you take a look at this one and we calculate the FIPS on the whole correction level, it's just around 50%. It's not even 61.8%. So this one can go up to 1.0850, and I still classify this as a downtrend on the Euro USD. Okay, so be mindful of that. Okay, Aussie USD, we talk a little at Aussie USD. Okay, selling yen. Yes, we'll talk a lot about yen now. Okay, so this is the dollar yen. You'll notice a turnaround with the dollar yen. It's picking up. It's now above 129 on the daily. Okay, so potential room to go to the upside. Yeah, I mean, there's a lot more room to go to the upside on the stochastics. Are we done with the current move? I'm going to get rid of this. I don't think we need that. Yeah, look, we got... So if you take a look at this one and then you imagine the dollar index, it's very similar. Okay, and that's where the US strength it's coming in. It's really pushing against the yen. It's really pushing against the euro and the pound as well, especially today. Okay, one of the few key drivers is this. Okay, in terms of potential move to the upside, I don't really need to draw a fib for this one because you're going to take a look at 130, 131. That's going to be your immediate resistance for the dollar yen. So if you're planning to trade the dollar yen, I much prefer to go long the dollar yen, but not now. What we're looking at is a potential correction intraday wise. We could potentially see a return towards 129 to 128.50. Okay, so let's just draw a fib on this one, because we can draw a fib on this one. If price closes below 129, let me zoom in and zoom in a little bit more. Okay, here we go. So if price closes below that 23.6% there, then you could go short, but it's really going to be a counter trend. Be mindful, because it could get taken out easily, because you only have about 30 pips of stop losses. In terms of target, you could bounce off 129. So I don't want to go long on the dollar yen. I just want to pay close attention for the correction. Sorry, I don't want to go short dollar yen, but I much prefer to go long if the dollar yen move closer to 129 level. If it bounces off 129 or maybe 128.90, that's where I want to go long on the dollar yen. Okay, because if I go long there, we could go, let's take 129. How's that? We'll take 129 to the stop loss. Initially, you can have it there, but you could be targeting 130, 50, 130, up to you. But once we have a new low, we can adjust our stop loss potentially like that. Okay, that's going to give you a really, really great risk reward ratio. But right now, stop losses are here. Risk reward ratio is about 2.5, so 1.1 to 2, 1 to 2.5. Okay, so around 139, 140 pips to the upside. Potential risk about 50 to 70 pips, but not now. I actually want to see price pull back down. I want to see a technical correction happen on the hourly time frame. Don't rush the dollar yen. Let this one slide, and we are going to take a look at the euro yen and the sterling yen. Very, very similar situation as well. Just let this one correct itself. If you are planning to scalp this, then yeah, make sure it's below 23.6. That would be your intraday scalp, whatever. Okay, just go for 129.05. Risk reward ratio is not going to be great, so I don't want to go short on dollar yen. Let's take a look at sterling yen. I don't think it's time to go in short on sterling yen, but let me put this into perspective. Unlike the dollar yen, on the sterling yen, this is actually within the Ichimoku cloud. We got 162, we got 164. Those are going to be your key level. Let's take a look at it from the hourly perspective. Is it time to go short yet? Not even for a scalp. I don't want to go short yet until I see a close below 162.50. If there's an hourly close below 162.50, and I'm going to highlight this. No, not red. Let's go green. Okay, a darker green. And a solid line there. That's what you want to be waiting for. If there's an hourly close below 162.50, then I'm okay going short. Other than that, I don't want to go short on this one. If you're planning to go long, let me give you the risk. It's not really worth it, because you are going to be having your stop loss below 162 and potential targets around 164. Momentum is pointing to the downside right now, but price is not going anywhere. And if you're going short right now, you're going against the short-term trend on the sterling yen. So be mindful. I don't want to go short unless it closes below 162.50. At this point in time, not even for a scalp, I don't like going short. So up to you on this one here. But it's not time yet. The euro yen, very similar situation. If you take a look at this one here, it's closer to 127.2. It's closer to 139. Let me just highlight 139 for you. So if it fails to close above 139, that's where I want to go short. If it fails to close above 127.2%, then that's your cue. But if you take a look at it from a daily perspective, this is above the Ichimoku cloud, and yeah, it could go 127.2, it could go 161.8%. You're wondering where that fib is. This is actually from this fib on the 4-hourly time frame. Okay, so is it time to go short euro yen? Is it time to go short sterling yen? I don't think so. Okay, I don't really like going short anything that has to do with yen. What I'm seeing is that potential yen weakness is still strong, right? No matter how bad the euro USD is, no matter how bad the pound USD is, the dollar yen, the euro yen, the sterling yen are probably in line right now. That it's actually not a market to be short in. So I want you to be really careful with the euro yen and the sterling yen. Even for scalping, I don't want to go short this. I much prefer to go long. Okay, if there's a close above 127.2%, I could be aiming for that 161.8%, right? It's just much more logical. If it does closes above that, then my stop losses could be here, just below 138.50 in terms of target. I don't even need to go for 161.8. I could go for 140. That's going to give me a 1-to-1 risk reward ratio. Obviously, if this one breaks above 139, I can move my stop losses there to about 138.60. Then that's going to give me a great risk reward ratio as well. Ideally, this can be adjusted. We are all going to be looking at potential returns towards 140.50, 141. So a lot of options there on the euro yen, but short, I don't think that's an option for today. Okay, next up is Aussie yen. Let me just zoom out a little bit. So we talked about this last time, a few weeks ago. I think it was about 2 weeks ago. We got support at 89.50, so this is no longer relevant because this one price broke above point D and it got rejected at 80, bounces off 89.50. So in terms of criteria, it's all met, so I can get rid of that. We got 90 and 91, that's still in play. And then we got 92 and then 94. So let me give you the daily perspective on the Aussie yen. Again, I don't want to be caught short on the Aussie yen. Overall momentum still points to the upside. Key resistance for this one, we're above 93. We don't really see anything until 94. So intraday wise, if you're planning to go long, this one, just be mindful. If you have a long position, then just keep an eye out on 94. But if you're planning to go long right now, your stop losses are going to be around 92.42. Your target level is just going to be there. Risk reward ratio is not going to be great. So keep that in mind if you're planning to go long the Aussie yen. So unlike the euro yen or the sterling yen where we have a little bit more room, the Aussie yen, we don't have a lot of room. We got 94 very close right now to the hourly time frame. So I think it's a little bit too late to actually go long the Aussie yen. So if you have a long position for the Aussie yen, keep an eye out on 94. If you're planning to look for a position in the yen crosses, then Aussie yen, it's not a great choice. You can go for euro yen, you can go for sterling yen, you can go for dollar yen. Aussie yen and Canadian yen, I believe, is out of the option because these ones are overextended. It's not really ideal anymore. Okay, the Aussie yen and Canadian yen is very close to resistance. On this one is actually 103. So the cap is actually coming in really close on the Canadian yen and the Aussie yen. So if you're planning to go long anything yen, just so it's a little bit too late. I'm not saying don't. It's just that there's a lot more risk involved with Aussie yen and Canadian yen. In terms of dollar yen, euro yen, sterling yen, I think there's a little bit more room to go if you're patient. Just don't rush this. For pound, in daily break 23 points, it's below 80. Is it okay to go? Go what? I don't understand. So yeah, yen pair's done. For my trade idea on oil, is it based on range break? Let me just recap that. I would prefer to go on the daily, but if you're in a rush on a short, it's too risky. It's there. It's just that in terms of resistance, I much prefer to have a much wider stop losses. Again, I don't like trading oil as an intraday trade. I much prefer to do this on the swing side, but the UK oil, that's going to give you a much better perspective because we actually have 3 resistances that we can use. Yeah, I not a problem, Michael. I'm just going through the questions here. Okay, so yeah, for UK oil, and US oil, I think in terms of resistances, it's much more significant if we take a look at 121, 122. But in terms of range breakout, is it a range breakout? I don't think it's a range breakout. What we're looking at here is potential technical correction happening. There's no divergence. It's just that this is a little bit overextended. There's a risk of this being overbought. I just don't see that risk yet until I see a close below stochastics on the daily below 80. Okay, I got a question in terms of it's not written in English, but I'll answer it. I'll translate it. How do we know when to target the retracement and when to target the extension? We're talking about FIPS. Yes, we'll talk about that in a minute. Have I gone through EuroCAD? I haven't gone through EuroCAD. I'll go through EuroCAD right now. Just be mindful, we got Canadian interest rate. I'll answer the FIP question in a minute. Let me just go through the EuroCAD. Daily supposed to downside below the Ichimoku range is actually getting wider. Okay. 1.3525, 1.3520, 1.35. I think. Okay, so there's a question on Euro Canadian, and I think it's good if you're trading anything Canadian right now. In about an hour's time, I believe it's an hour's time, but correct me if I'm wrong, there's actually going to be a potential rate hike coming up from Bank of Canada. In terms of Euro Canadian, if you are planning to go long Euro Canadian, don't do it now. Do it closer to 1.35 and wait for the momentum to turn around. So I'm going to let this one ease off a little bit. I think we might have support coming in at 1.35, but your key level for today is actually 1.35. If price bounces off 1.35 and the stochastic turns around like so, then I much prefer to go for a long closer to 1.35 because in terms of my stop losses, I don't have to place it really far. 1.3475, just 25 pips below that. That's swell. In terms of target, you could target the top of the Ichimoku cloud or 1.3575. Okay, risk to reward ratio is closer to 1 to 2 risk to reward ratio, but this is my ideal scenario for Euro Canadian tonight. If you're planning to go for the rate statement from Canada, Bank of Canada, EuroCAD, a little bit too late to go short. If you have a short position, be mindful of support coming in at 1.35. If price bounces off 1.35, then I'm potentially looking for a long on Euro Canadian. Okay, great. Can we trade on Euro Yen based on range breakout using a 15-minute charts? Euro Yen 50 minutes. Let's move on to this one here. Wow, Aussie's really pushing up high. Euro Yen 50 minutes range breakout. This one? See, it's still gonna give you 139, right? So not that much of a difference. So it's still gonna give you a resistance at 139. If you're planning to go short on this one, just be really careful. This is out of 50 minutes. I don't think we can draw a trend line technically. Is it going to be reliable or accurate? I don't think so, but that's the scenario there. So it's forming more of an ascending triangle on the 50-minute time frame. I don't want to trade a breakout to the downside, but if it does break to the downside, I'm not going to be using a range breakout on this one. Actually wait for this one to close below 138.50. Okay, so end of the day, it's still going to give you the same range, right? 139 and 138.50. If it breaks below 138.50, then yeah, if you plan to go long, just make sure your stop losses is there. It's just that you're at a disadvantage because there's a lot more potential for this one to go to the upside if it does break above 139. Okay, so let's pick an example on when do we target retracement or extension. So we got new hour, yeah. Okay, so let me just answer this. When do we target an extension? When do we target retracement? Let's go back to this example over here. I'm actually going to remove this. Okay, this is where it changed gear. Okay, take a look at this one here. So we've been doing extensions, retracement, extensions. Okay, this is the point where it changes things around. Okay, so let's say this is the fib, right? This is still in the realms of a retracement. We're not really above. We're not really doing any extensions. However, you'll start noticing that this one created an extension. So, right, this one is close to 61.8. Let me just highlight that for you. Okay, and the second one, it does that. It breaks above and creates an extension, right? So this one creates an extension. Price has moved above 161.8. At this point, going forward, we're actually going to be looking at an extension or a retracement because one, price is above the Ichimoku club, blah, blah, blah. But we reached 161.8. Therefore, subsequently, we're going to be looking at a potential for price to reach 161.8%. So if you're trading the ABC, right, let me just label this for you. If the market is in an uptrend, okay, so let's go ABC, yeah. So let's see if I can clarify this for you, for those that want to know when to go for a retracement, when to go for an extension. The moment a market creates this, when we have the ABCD, right, we kind of know the trend has shifted, the trend have changed. So if the market is moving in that direction, therefore any short is going to be a retracement, any long is going to be an extension. Does that make sense? Okay, so we got ABCD. You'll notice that the market is moving upwards in an uptrend right now. Okay, so any long position that I go for is going to be an extension. So if I plan to go short the sterling yen, for example, if I plan to go short right now, this is going to be my fib, yeah, and I'm going to be looking for a retracement. I'm going to be using a retracement as my target because right now we know this is moving in an uptrend. Therefore, I'm going to be looking for price to potentially bounce off 61.8 to 78.6% and then create an extension. Okay, so if I'm going short here, if I'm going short right now, then I want to target that. But once this is done, once the short trade is done, price has bounced off, then I want to go long. When I want to go long, I want to go for the extension. Therefore, I'm going to be targeting beyond this level. I'm going to be going for, anywhere higher than 163.50, for example. Okay, so hopefully this kind of clarifies to you what is a retracement. When do we go for a retracement? When do we go for an extension? In a nutshell, if you are countering a trend, if you're trading a counter trend trade, go for the retracement levels. Go for 38.2, 50%, 61.8%, 78.6%. If you are a trend following trader, if your trade is following a trend, then go for the extensions because the assumption is that the trend is likely going to continue. Therefore, an extension is likely going to happen again. Okay, that's when we know when to go for the retracement, when to go for the extension. If you are countering a trend, go for the retracement. If you know the trend is likely going to go up, but you want to go short for intraday reason, then go for retracement levels. Okay, but if you're following the trend, then it's always an extension. Okay, hopefully this clears up stuff. Okay, I think that's time for tonight. And this is an English session. This is not a Hindi session, so I believe there's going to be a session in Hindi. But this session is actually in English, and we are actually at the end of the session. Again, feel free to review the session if you want to, but just to remind you, we have the Bank of Canada rate statement, 50 basis points as expected today, this morning, depending on your time frame. Okay, we got the JOLTS number at the same time, as well as the ISM manufacturing PMIs from the US. Tomorrow, the UK market is going to be closed. The Italian market is going to be Italian market is closed. UK market is closed. Chinese market is closed. Tomorrow we got the ADP numbers. ADP and FP. Again, if you don't know the difference, ADP and FP and the US and FP numbers from the Bureau of Statistics are different. One is it's a private number, ADP. Okay. The other one is from the Bureau of Statistics. We got NFP numbers coming out on Friday. Unemployment rate expected to drop down to 3.5% from 3.6%. Okay, so with that, thank you all. Is that Elliott wave concept, and does that work on downtrend? Yeah, as long as the trend is correct, it's not an Elliott wave concept. Let me go through that. ABCD is more of a logical concept other than anything. So if you know the market is in a downtrend and you expect the market to create a new low, that's just the logic of being in the trend, right? Downtrend, new lows are expected. In an uptrend, new highs are expected. That's kind of the logic behind it. Okay, thank you all. Good luck with the trades, and I'll see you next week.